Hi guys, welcome back. So this one's going to be an interesting video. I think a lot of retail investors will probably hate this, but hate me saying this, but it is the truth and it is reality. Um, so to sort of make a start on it, as you read by the title, why prefer stocks over Forex or trading currencies? Um, so So the reason why I make this video is because a lot of people just love to just trade Forex because they watch these Instagram videos and all these silly people just posting some stupid videos with money and cash and whatever, and basically saying that, oh, this is how you can get rich, trade Forex because you're working 9 to 5, so that way you can still trade um, after work and make money and this and that. It's all rubbish, right? Because as a trader, you normally need to sacrifice a lot of time. You can't just come after work and put on a trade in a currency and make money, right? In the periods where, okay, this is more volatile than anything else, but even then, getting the right direction, it's just sort of, you're literally gambling, and that's why I think people get more hooked on it. And then the idea is you can leverage a lot more. So I don't usually do currency plays, but I actually got into a position recently in a currency where I think I got $100,000 position and they only charged me a $2,000 margin. I'm thinking, wow, it's crazy. They're giving me that much leverage, but that's because currencies are not that volatile either, so they're safe on their part. One was a pretty good trade that I did on a Forex. Actually, on Friday I had met some people from the industry, so to talk about some consultancy work that I could do for them, that I might do actually as a project. But obviously they asked me some sort of ideas that I've got, and I said, well, one of them is a dollar weakness this year, and it's to be honest, that's not really that hard to predict. If you've been following the Fed and if you keep up to date with the news, you would know that a dollar weakness is definitely on the horizon now from last year, because last year we had good gains in the dollar interest rate hiking environment, whereas now we're having a decline. We're having no interest rate hikes now, potentially cut. So signs of sort of slowdown in the economy and growth. So I predicted on a Friday, and obviously with currencies you end up getting huge positions, right? So 0.5% or 0.7% in the space of a week is a huge move, and obviously the firm all of a sudden wants to then bring me in straight away, because that clearly, obviously, without going into big details, but this sort of move for them is like close to a $10 million profit, so in the space of a week. So it was definitely a good trade, but yeah, so I took a little bit of a tangent there, but sort of to explain why I say stocks over Forex, because these Forex trade, like for example dollar weakness, which I have mentioned in previous videos, is sort of macro calls. These are macro calls, i.e. if you think, for example, the country is going to default, so like the Turkish lira, we had a massive weakness in Turkish lira within the last year, and that was because of the collapsation pretty much in Turkey, what's going on. So those sort of calls, you want to play those. That makes sense because the economy is having a massive problem, so you can make money on the weakness of the currency in that country. But otherwise it shouldn't be sort of calls just day to day to profit and trade off, because you just don't know which direction it will go, and anyone claims that they do is just lying to you. The reason being is a good way to sort of check. If you look at hedge funds out there, what do they specialize in? There's hedge funds that specialize in equities the most, there's fixed income, and there's some in commodities. Currencies, there's hardly anybody that says, oh, we're going to be the massive best players in currencies. They use currencies mainly in the industry as hedges, or they use it as, like I said, these macro calls. But there's not such thing as just trading in and out of a currency, because one, you just got leverage huge to get sort of make money, because like I said, 0.7 move is huge for a currency move, but in general you don't get moves like that, especially in the space of a week. So that's why, one reason why you should not follow those scam artists or those people, and sort of understand the logic behind as to why they're selling you that idea, because they just want to make money off you. But in reality is also, you should understand, well, that's not how I'm going to make money, because you need to understand fundamentals and understand what drives markets before you make any investment decisions. So that's why you should always pick stocks over commodities, because over currencies, because stocks will force you to go into deep dive into fundamental analysis, and before you even do a technical analysis, it will force you to think about what is this company doing, what is the economic climate like, would this company make money? If they're a retailer company, for example, is the economy doing good enough for consumers to have more um, you know income in the household and more savings and stuff like that, where they will have then more opportunity or more likely to spend money because they're making money. So would that drive the company's revenues and so on? So it will start making you think outside the box, which is really, really important. um, so yeah, so I thought I'd make this video because a lot of retail investors lose a lot of money just trading forex. So I always suggest everyone start with equities, get your understanding, get a grip on it. Don't bother with FX at the start. Forget the leverage aspect. Just understand the markets first before anything. So yeah, I hope you guys enjoyed this video. I do have a cash app that I will leave in the description. Please donate. I'll keep my videos free, but obviously it's time consuming. So any sort of help donation would be really, really appreciated. And I hopefully you guys see you guys in the next one. Bye.